China's holdings of US Treasury securities have dropped to roughly 690 billion, continuing a slide from a peak of over $1.3 trillion back in November 2013. Now, you might think this is just normal portfolio management, some rebalancing between economies, but here's what you need to understand. This isn't a correction. This is the systematic dismantling of dollar dominance, and it's following a pattern so precise that every single reserve currency collapse in history has followed the exact same four stages. And we're not talking about a theory here. We're watching it happen right now, the biggest coordinated move away from the dollar in history. And if you understand the mechanism behind it, you'll see that what's happening isn't just predictable. It was always inevitable. Look at what happened on April 8th, 2025. The VIX, that's Wall Street's fear gauge, it shot up to 52. You know, when we've seen numbers like that before, 2008, the global financial crisis, 2020, COVID pandemic. That's it. Markets don't price in fear like that unless they're seeing something systemic, something that can't be fixed with a rate cut or stimulus package. Meanwhile, the US is running a deficit of about 6% of GDP. That's roughly $2 trillion a year every year. Foreign countries are holding $8.5 trillion in US Treasury securities as of December 2024. And here's the kicker, China has set up currency swap agreements with 42 different central banks. We're talking 3.8 trillion yuan worth of capacity. The alternative system is already built, so the real question isn't whether the dollar's dominance will end. The question is how fast it happens. And here's what nobody in the financial media wants to tell you, what every analyst is dancing around, what every economist refuses to acknowledge. Reserve currency collapse doesn't just happen, it follows a pattern, a four-stage pattern that has repeated itself with mechanical precision throughout history. Let me break it down for you. Stage 1, the setup. This is where a country that issues the world's reserve currency racks up massive debts to foreign nations, way more than they could ever actually pay back. Stage 2, the debasement. That's when the country starts printing money to cover obligations it can't afford anymore. Stage 3, the crisis of confidence. Foreign holders start selling first, slowly, then all at once. And stage 4, the collapse. The old reserve currency gets abandoned, a new system takes over. This pattern has played out 3 times in modern history. Britain after World War II, the United States under Nixon, Germany in the 1920s, and right now, we're in the middle of watching it unfold again. China isn't attacking the dollar, China just recognizes that stage 3 has already started. Let me show you exactly how this works, because once you see this pattern, you can't unsee it, and you'll realize we're not heading toward a crisis, we're already in one. Stage 1 is the foundation, the trap. A reserve currency nation builds up external debts that are way beyond its ability to actually honor them. Here's how it works. Foreign countries accumulate your currency because they need it for trade. They hold it in their central banks. They use it to settle accounts. And the country issuing that currency, they get to live beyond their means. They import more than they export. They consume more than they produce. They spend money they don't actually have. Economists call this the exorbitant privilege. Basically, you get to write IOUs and the whole world has to accept them. But here's the trap. As more and more of your currency flows overseas, you got this growing gap. On one side, all these foreign claims on your currency. On the other side, whatever gold or real assets you've got backing it up. Eventually, the math stops working. You've got way more promises outstanding than you could ever fulfill. The system becomes insolvent, but politically nobody can admit that yet. Stage 2 is when the printing starts. The country faces mounting debts, obligations piling up, and there's really only one move left. Print more money. Expand the currency supply to meet commitments you can't honor any other way. Interest rates get pushed down to make the debt payments manageable. The government runs bigger and bigger deficits because domestic politics won't allow spending cuts, and the currency supply grows way faster than the actual economic output or hard assets backing it. This isn't some calculated strategy. It's desperation masquerading as policy. You've promised more than you can deliver, so you create purchasing power out of nothing. And for a while it works. The world still needs your currency, trade still happens. But underneath, confidence is eroding. The smart money notices, foreign central banks see their reserves buying less and less. And quietly, the first sellers start moving for the exits. Stage 3 is where it gets real. The crisis of confidence. Foreign holders realize they're holding a bag that's worth less every day, and they start selling. First, it's quiet. Portfolio rebalancing, they call it. Then it speeds up because everyone realizes they're in a game where the last one out loses everything. This creates a vicious cycle. As reserves get sold off, pressure builds on the currency. The country tries to defend it. They burn through gold, they implement capital controls, they set up emergency credit lines with other central banks. They pressure allies to keep holding. But these are just delay tactics. The math doesn't change. If you've got 10,000 tons of gold but you owe the equivalent of 100,000 tons in currency obligations, that gap can't be closed. It can only collapse through devaluation, through inflation, through default. One way or another, the debt gets wiped out. Stage 4 is the endgame. The old reserve currency gets abandoned, exchange rates fail, international agreements fall apart, and a new monetary order emerges, usually after a period of chaos. The transition can be slow and managed, like Britain's decline from 1945 to the 1970s. Or it can be catastrophic, like what happened to Germany in the 1920s, but it always happens. No reserve currency has ever reversed course once stage 3 begins. Not one. The math doesn't allow for it. Now let me prove this to you. 3 historical examples. Each one walks through all 4 stages. Each one shows you that what we're seeing today has happened before multiple times, and it ended the same way every single time. First, let's talk about Britain, the British pound after World War II. Britain came out of the war on the winning side, but financially they were destroyed. By the end of 1945, Britain owed £3.7 billion to other countries. Their gold and dollar reserves were 620 million. Think about that ratio. 6.1, they owed 6 times more than they could possibly pay. Stage 1 complete. The trap was set. All these Commonwealth countries and colonies held sterling in their reserves, believing it was as good as gold. It wasn't. Stage 2 kicked in immediately. Britain couldn't pay its debts, so what did they do? They got loans from America and they started printing. In December 1945, they signed this agreement with the US. Part of the deal was they had to make the pound convertible again by July 1947. Let people exchange pounds for dollars or gold. And when that day came, disaster struck. Within a month, the Bank of England lost $1 billion. Between August 10th and 15th alone, they burned through 175 million. Stage 3, the run on the currency. Everyone who was holding pounds rushed to convert them into something real. Britain went through that American loan in weeks. Then they started depleting their own gold reserves. By August 19th, they gave up. Convertibility suspended. The pound became a closed system held together by controls and political pressure. But you can't escape the math. Sterling's share of global reserves collapsed, 81% in 1945, down to 58% by 1950, 35% in 1960, just 11% by 1970. Britain had to devalue twice. First in 1949, then again in 1967 when they cut the pound from 280 down to 240. By 1976, they needed an IMF bailout of £2.3 billion just to keep the lights on. And the pound hit a historic low of 1.59s. Stage 4, complete collapse. Sterling was done as a reserve currency. The dollar took over, and by 1970, 85% of the world's reserves were in dollars. The pattern played out perfectly. Set up, print, crisis, collapse. 30 years, but the sequence was identical. Second example, August 1971, the Nixon shock. This is the event that created the money system we're living under right now, and it followed the exact same script. By the late 1960s, the US had the same problem Britain had in 1945. Under the Bretton Woods system, countries could settle their accounts in dollars, and those dollars could be converted to gold at $35 an ounce. But America had spent way more than it could back. The Cold War, Vietnam, Great Society programs, all of it financed by printing money. By the 1960s, there were way more dollars in circulation worldwide than America had gold to cover. At 35 an ounce, the math didn't work. Stage 1 complete, external dollar obligations exceeded gold reserves. Stage 2 was pure money printing. The government couldn't cut spending, couldn't raise taxes enough, so the Federal Reserve just expanded the money supply. Inflation started rising, and foreign central banks, they saw what was happening. They started converting dollars to gold. The gold started flowing out of Fort Knox. Then, on August 11th, 1971, Britain made a request. They wanted $3 billion worth of gold moved from Fort Knox to the Federal Reserve in New York. That was the signal. If Britain, the partner who helped create Bretton Woods, was demanding gold, the game was over. 2 days later, August 13th, Nixon took his advisors to Camp David for a secret meeting. Burns, Connolly, Volcker, 12 others. They were looking at the numbers. By August 15th, US gold reserves had fallen to only 10,000 metric tons, less than half the peak. Meanwhile, unemployment was at 6.1%, inflation running at 5.84%. On August 15th, Nixon went on TV and suspended dollar convertibility to gold. Stage 3. He called it temporary, it was permanent. Bretton Woods died that night. Stage 4 took a couple years to play out. By 1973, floating exchange rates replaced the old system. The dollar survived as the reserve currency, but only because there was no alternative ready yet. But look at the cost. Gold was fixed at $35 an ounce under Bretton Woods. Today, it's over $3,000. That's a 98% loss in the dollar's purchasing power over 5 decades. The pattern repeated: set up, print, crisis, collapse of the old system. The dollar's dominance continued, but only because it became pure fiat, backed by nothing except American military and economic power. But even that's temporary. Third example, Germany in the 1920s. The Weimar hyperinflation. This is what happens when the pattern runs its course at maximum speed. Germany's national debt hit 156 billion marks by 1918. Then they got hit with reparations from the Treaty of Versailles. 50 billion marks under the London Schedule of Payments in May 1921. Stage 1, a nation with debts it could never pay. The annual payments alone were about 2.5% of German GDP. The math was impossible from day one. Stage 2, they printed. Germany couldn't raise taxes or cut spending enough to meet the payments, so they fired up the printing presses. Before World War I, the exchange rate was about 4 marks to the dollar. By 1920, the mark had lost 16 times its value. It stabilized for a bit at 69 marks to the dollar. But by July 1922, prices had risen 700%. The government was trying to inflate away the debt. The market saw through it. Stage 3 hit like a freight train. In January 1923, France and Belgium invaded the Ruhr Valley, Germany's industrial heartland. Germany had missed its 34th reparation payment out of 36 months, so they just took what they were owed. The German government responded by subsidizing workers on strike, pumping even more marks into the system. The mark fell from 320 per dollar in mid-1922 to 7,400 by December. Then the collapse accelerated beyond anything you can imagine. 48,000 marks per dollar in January 1923, 192,000 in June, 170 billion in October, 4 trillion in November. By November 1923, $1 was worth 4.2 trillion marks. Stage 4, total annihilation. A loaf of bread that cost 20,000 marks in the morning would cost 5 million by dinner time. Restaurants raised prices while you were eating. Workers got paid twice a day because their money lost value between lunch and quitting time. They had to introduce a new currency, the Rentenmark. In October 1923, one Rentenmark was worth 1 billion old marks. The old currency became wallpaper. Literally, people used it to heat their homes because it was cheaper than firewood. The pattern completed in 3 years instead of 30. But the stages were identical. Setup, print, crisis, collapse. 3 examples, 3 different countries, Three different eras, the exact same four-stage pattern every single time. This isn't theory, this is historical fact. And now let's apply this pattern to the United States in 2025. Stage 1, the setup. Done. Foreign countries hold 8.5 trillion in US treasuries as of December 2024. America's total public debt is over 33 trillion. The federal government runs 2 trillion deficits year after year. These obligations can't be met through taxes. They can't be met through economic growth. They can only be rolled over through continuous borrowing or covered by printing more money. The math is identical to Britain in 1945. External obligations exceed any realistic means of payment. The setup is complete. Stage 2, the printing done. For decades, the Federal Reserve has been expanding the money supply to cover federal deficits, to stabilize markets during crises, to prop up asset prices. The dollar supply has exploded relative to gold reserves, relative to GDP growth, relative to anything tangible backing it. This isn't conspiracy theory. This is stated Fed policy, quantitative easing, forward guidance, yield curve control. Every trick in the book has been used to create money from nothing. This is stage 2. Verified stage 3, the crisis of confidence. We are here right now. China cut its treasury holdings by 173 billion in 2022, another 50 billion in 2023, 57 billion in 2024. By December 2024, they were down to 759 billion. By October 2025, roughly 690 billion. But here's what makes this different from normal portfolio management. China has signed currency swap agreements with 42 countries, almost 4 trillion yuan in capacity. They've built the cross-border interbank payment system, CIPS. It now includes 168 direct participants and over almost 3,400 indirect participants spanning every major region. This isn't just selling treasuries. This is building the alternative infrastructure. China is preparing for stage 4 while still executing stage 3. Look at what Chinese banks are doing. They've cut back on dollar lending to emerging markets since early 2022. Reports suggest this intensified after the West sanctioned Russia in 2022. China's been talking about de-dollarization for years. Now they're actually doing it. They're selling dollar reserves, building alternative payment systems, setting up bilateral currency swaps with dozens of nations, accumulating gold. Every single action is preparation for the dollar losing reserve status. This isn't speculation. This is observable behavior happening right now. The crisis of confidence is underway. The race for the exits has started, and history shows that once this starts, it doesn't stop. Now here's the part where I tell you what everyone else won't. Stage 4, the collapse, isn't just likely, it's inevitable. Not because I say so, because the pattern has never been broken. Not once, not ever. No reserve currency in stage 3 has ever reversed course and gone back to stage 1. It doesn't happen. It can't happen. When external obligations exceed your ability to pay, when confidence evaporates, when alternative systems get built, the old order dies. The only question is how long it takes. This is where the optimists jump in. They'll tell you America is different, that the dollar is backed by the most powerful military in history, that the US economy is the most innovative in the world. That technology will save us. That modern monetary theory means we can escape the old rules, that this time is different. Let me be crystal clear with you. This time is not different, it never is. Britain thought the empire would save sterling, it didn't. Nixon thought American power would save Bretton Woods, it didn't. Germany thought it could print its way to prosperity, it couldn't. The pattern doesn't care about military strength, it doesn't care about innovation or economic dynamism. The pattern is mathematical. When you promise more than you can deliver, when you create money faster than value, when holders lose confidence, the system fails always. Every single time. Here's what you need to understand about the liquidity crisis China has triggered. It's not a crisis for China, it's a crisis for everyone still holding dollar reserves. Think about it like a game. If you're a foreign central bank holding US treasuries, you've got a choice. Hold and hope the dollar keeps its value, or sell and be among the first to get out. But if everyone rushes for the exit, the last ones holding are stuck with worthless paper. China has made their choice. They're getting out slowly at first, 173 billion in 2022, 50 billion in 2023, 57 billion in 2024. But the pace is picking up. Other nations are watching. Japan, the biggest foreign holder, has started trimming too. The UK has cut holdings. The exodus is beginning. The American government is going to respond exactly like every reserve currency issuer in stage 3. Capital controls to slow the outflows, interest rate gains to make dollar assets look attractive, emergency credit lines to provide liquidity to foreign central banks, bilateral deals to discourage selling, political pressure on allies to keep holding. These tactics buy time, they don't fix the math. Britain tried all of them. They delayed things by 30 years, but they couldn't prevent the collapse. The US will try the same moves, they'll fail for the same reasons. Here's what you need to do. Understand that this pattern is real. Study it, learn it. This isn't me predicting some distant future. This is me describing a process that's happening right now. The United States is in stage 3. The selling has started. Alternative systems are being built. The math guarantees stage 4 is coming. The only unknown is whether the transition happens slow like Britain's 30-year decline or fast like Germany's 3-year implosion. Position yourself accordingly. Don't keep everything in dollars. Understand that US Treasuries aren't the risk-free asset everyone thinks they are. Not when the issuing nation is in stage 3 of reserve currency collapse. Look at hard assets, commodities, currencies from countries with trade surpluses and low debt levels. Learn the difference between currency and money. Currency is paper backed by promises. Money is value backed by scarcity. There's a reason central banks around the world are buying gold at record rates. They understand the pattern too. Most importantly, reject the idea that this time is different. It's not. The pattern is real. The stages can't be skipped. The outcome is determined by math, not hope. China didn't trigger a liquidity crisis out of nowhere. China recognized that the crisis was already baked into the system by stages 1 and 2. They're just acting on information that's available to anyone willing to look at history. Subscribe if you want to understand how this machine was built in the first place. How to protect yourself during the transition, what actually happens in stage 4 when the world's reserve currency finally collapses. The pattern is playing out as we speak, history is repeating with mechanical precision, and the only difference between people who come out ahead and people who get destroyed is whether they understood the pattern before it was too late. The math doesn't lie, the pattern doesn't break, and stage 4 is coming. The question is, will you be?